Hey, everybody. Thanks for checking into our latest Traded Black podcast. I'm your host, Shad Dales. Back in 2021, Harvest Health and Truly, that was one of the biggest mergers and acquisitions in the industry's history. So their co-founder, he joins us here this morning. We want to find out what is he up to now and how does he think the industry has evolved from 2021 and what he can anticipate going in to the back end of 2024 and then into 2025. So with that, let's welcome in first co-host Anthony Varell. Good to see you, sir.
How's it going? Good to see you guys.
Good to see you as well. And as I said off the top, that was one of the biggest mergers and acquisitions between the two companies that this industry has ever experienced. And let's welcome in the co-founder of Harvest Health and Recreation, now CEO of Story Cannabis, Jason Vedadi, and executive chairman. Good to see you. Nice to meet you.
Yep, cheers. Likewise.
How's it going?
We were talking before we got filmed. You're in Austin, Texas, but interesting background with you. You don't hear, well, let's just face it, timing's everything. And you've had a lot of successful exits early on within the industry. But here we are, 2024. How would you best describe the current situation the cannabis industry is in right now? I know it's a pretty broad question, but we've got a lot of, pending short-term catalyst moments with Amendment 3 and rescheduling on the horizon over these next, 30, 60, 90 days. But if that stuff does all come to fruition, where are we in this space, do you think?
I think that people are kind of like at this very tired point, right? And so they kind of want to know where we headed, because I think there was a huge letdown in lame duck a couple years ago on banking. Yeah. And then we kind of saw everybody kind of dissipate. And now there's some excitement because, people are, I would say, generally positive on the fact that these companies are going to be normalized taxpayers as early as next year, maybe even retroactively this year if they're really optimistic. And then we have some pretty large rec initiatives that would change balance sheets considerably on the public side. And so we're sitting in kind of a 90-day hold period until this election's over. And then I think you're gonna get a pretty good idea where we're headed. I mean, maybe people start getting excited about what a Harris, presidency looks like, or if it's Trump, then we have status quo, or people start getting nervous about who the AG is. But you kind of like deal with the speculation. A few of these companies have kind of separated themselves in the last 3 years. Somebody got nimble. Some people have actually produced really positive quarters, and some people have produced some poor quarters. So, like, companies are starting to separate, obviously based on ops and management, whereas they're all they all still kind of trade together, unfortunately, because it's an inefficient market without having real institutional capital. But, we're unfortunately in a wait and see environment. If you gave me a scenario, I could probably kind of play out what I think is going to happen, but it's too instrumental. It has such a massive change in where we end up.
Yeah. So as I said off the top, you founded Harvest Health and Recreation back in 2017, then later sold, was it 2021? Sold to True Leaf?
Actually, so I've been in the space way longer than that. I had even started early and left from 2009 on. And I actually started my own company, Modern Flower, which then merged with Harvest in 17. We took that public in 18. And then True Leaf ended up selling. That deal got announced in 2020 and closed in 21.
Wow. Okay. And then after that was done, you started a company called Oasis, built that facility to 89,000 square feet, then sold that to Air Wellness, then repurchased it back for the fraction of the cost, correct?
Yeah. And then I was already started Story Cannabis and ended up buying that back. We were kind of going to just kind of do one state at a time and sell them, like we did that Arizona asset.
Yeah.
And then we got some Maryland assets, we had some New Jersey assets, then we won some stuff in Ohio. And then all of a sudden we had some discrepancy in our agreement with Air and ended up buying that back. And so it wasn't really the plan to turn this into a 1,000 employee 5-state operation. It just kind of happened. I mean, we really didn't have a choice. But
is there anything that you did with Harvest that was like a key learning that you learned not to do with Story, or anything that you're doing different the second time around that you build an MSO?
Yeah, we made a lot of mistakes. One, I learned that I just don't want to be a public company executive. And I can tell you that out of the gates, especially in this environment, like, you got to give these people way more kudos than they get. I mean, they're dealing with cross-border issues, illegality, banking issues, financing. I mean, they get hit in every direction from their construction to the time they're selling the stuff. Like, And the fact that you've got a different set of rules, not just like at everybody says, well, every state's different. How about every municipality is different? How you advertise is different. Like it's a miserable thing. And then when you're public, you're just under such scrutiny, and it's like the biggest hater group of all time. So it's just, I think it's just at some point it just gets old. But we got one problem is like this thing moves so fast, right? And in 2018, we were being measured on like our footprint because people thought this industry would evolve much faster than it did. And so you kind of got to give GTI the credit in saying, we're going to assume everything goes bad and we're going to build a business that works with 280E and everything else and just happen to work out that way. But so you get measured on footprint. And so like you scale these businesses. And I'll tell you the one that caught us probably the worst when I look back. We really were like an Arizona-based company, right? We were known as an Arizona company. And the medical business in that state came on so fast. The patient count came on so fast. Like the break-even analysis was so much faster than these other states. Like if you look at Ohio, the medical market still sucks, right?
It's like 165,000, I think, the program itself. What was Arizona?
We had like 700,000.
Wow.
Arizona was insane.
And we weren't really, because like if you look at the map, Tucson and Phoenix are kind of in the middle of the state. So it wasn't getting cannibalized by neighboring states either, right? So then Ohio coming on later and having Michigan kind of like infiltrate everything else. So the forecasting was really bad. Like none of these other states turned out to like Arizona, which is what we were used to. Because when we took the company public in 2018, we actually produced free cash flow. Yeah. So we were already an operationally profitable business. And then we scaled really fast. And the other mistake we made is, we were all, kind of business guys that had run a business of some kind. I was a real estate developer, had my construction business. Steve was a lawyer, ran a law business. And then we had some other like kind of gritty guys that had operated their own businesses, construction businesses and such. We did a decent job running it. And all of a sudden you go public and people want to see these flashy resumes. So here we bring in all these CPG guys and, bless their hearts because they were all pretty good at their prior professions. Like most of those people botched. Like none of those people are in the industry anymore. They've gone back to something else because they just couldn't do it. And so it's kind of a unique personality that's
why. When you say they couldn't do it, it was just like because of the complications what we just outlined, where it's just like every municipality is different, just legality, states is like, what was, I guess, the feedback experience that you realized this wasn't what I was really hoping for?
Well, they're kind of institutionalized. Like they don't realize how good they've had it for how long. Like all those CPG brands over time have just kind of gone straight up, right? And so they had an operational system they were used to that was successful, and they tried to like operationalize these businesses that way, and it doesn't work. Like we can't market to the same customer in Arizona the way we market to the same customer in Maryland.
Mm-hmm.
So, and it goes all the way down the list with everything.
That's the challenge I find with that industry, though, right, Anthony? It's just like you get these people that have institutional backgrounds, and this is an emerging industry, and we see it everywhere where it's just you gotta learn this and learn it fast. You don't walk, you run as soon as you enter this space.
I'm obviously not in the C-suite of any of the MSOs, but if I was going and getting human capital, I'd be taking it from Silicon Valley in the startup world versus seasoned CPG guys, because this plane's being built as we're flying it for the most part. And I mean, Jason, with your expertise and with the capital markets experience that you have, I mean, what do you see as the end game for a lot of these private MSOs, we'll call them? Because I mean, I agree with you. Being public is a pain in the ass. It's a very arduous and rigorous process, especially for the ones operating the asset. And there are some formidable assets that are there in the private market. From an MSO perspective, do you see private equity consolidating? Do you see them consolidating and creating a bigger conglomerate? Or has like the end game not really been spoken about really outside of public market exit for a lot of the private stuff?
It's really tough speculation because the thing is like somebody's going to have to underwrite like this next wave of, let's say you get rescheduling and then, we couldn't even get banking through the Senate. So are people going to say, look, like this is what we have for a long time. Congress is never going to pass legalization. And then people get comfortable with the cash flow analysis on a state by state basis, which looks more like a beer distributor model, right? Where they're like kind of bifurcated, and then people have to make a decision whether they just want to be in those specific markets and make an investment. Or is it like, this is going to go full blown legal, we're going to drop the walls, and then we're going to have to listen to whether that underwriting makes any sense. I'm pretty nervous on private MSOs if they're looking for like a large cash exit, right? We've been kind of thinking about, what do we want to do, right? Like there's been like talks on ESOPs. Like, it's not crazy to sell this back to your employees.
Yeah.
I mean, we were looking hard at it before this new shiny object Schedule 3 like became a reality this last year. And we looked at it and said, look, they need the votes. They're going to push us. And it's kind of gone that direction.
Right.
Yeah. But we were looking at ESOP. We're like, look, we could just pay ourselves back with 280 capital, right? Instead of putting it and start selling it back to the employees. And, that's fine. That was the most efficient tax structure and the most inefficient tax business. And so we were looking really hard at doing that ESOP, and some people have actually done it. And it's something, if things don't change, like we look at it and say, look, we have a business that makes quite a bit of money. Why not just pay ourselves back?
Yeah.
Let them buy half the business or 2/3 of business and just keep running it. Because the current construct is obviously, at some point investors want liquidity and they want cash flow and they want distributions, right? So I think at the end of this run, you're going to have to get to that place one way or the other, or your business is going to die.
I'm with you on that. I'm still sitting on a lot of private investments in the cannabis space from like 2016. And it's like, guys, when are we going to get some liquidity? Because you're going to either pay me back or die. And I mean, seeing a lot of these cannabis companies die in the vine is not going to be a net positive for the space.
Yeah. Well, the ESOP topic conversation, we actually met somebody, Anthony and I, last year in Chicago, but I was surprised to see how much actually interest there is in the space that pertains to it. But definitely an option that, once didn't seem fathomable to consider is now being considered tremendously, especially when you look at just the challenges I think this industry faces. But like when we look at, let's create a couple of different scenarios. Like we keep hearing that rescheduling is going to happen. But also the big, elephant in the room is Amendment 3. What would you say, I think, is a bigger catalyst moment for the industry? Is it rescheduling or is it Amendment 3?
For the industry as a whole, I think rescheduling is a bigger deal because that has an impact on every single business, right?
Yeah.
And that one really matters the most for people who are actually EBITDA positive. I think the people that can't make money are kind of dead and they're sitting here waiting for some heroic moment that's not going to show up. So, if you're not producing EBITDA, then being normalized taxpayer is really not going to produce any more free cash.
Yeah.
I guess it puts you less in debt with IRS. So I guess that's positive. But from the public market perspective, like it's really governed by 5 or 6 companies max, maybe 7 or 8 if you want to stretch it out. And in particular, for I would say the last 4 years, people would basically be talking about 5. And Cresco kind of gets left out sometimes and they go top 4. And I think now they're worthy of coming back in top 5. They produce a decent quarter. So for those 5 companies, excluding GTI, which has kind of performed every quarter and produces a meaningful amount of free cash and EPS, is that for them, it's Florida rec. I mean, if you get no rescheduling, you could make the argument for a couple of them if they had a longer forecast that rescheduling dies and Florida rec goes. I mean, think about what that does, because they end up with a larger, probably a better net cash position than even rescheduling potentially. Curaleaf, Verano, and Trulieve in particular. I mean, they own the market. If you get no rescheduling and Florida rec passes, I mean, they own the market. They own the industry. They own anything they want, and it starts getting cheap for them, and they start producing more money. So
that's a good point.
It'd be inverse for them.
Lots of curveballs that are going to be thrown our way in the next little bit. But it makes a very, very good point as far as, just how big, obviously, the Florida market is. But the trend that we're seeing is just, especially in the latest earnings reports, are some of the companies that are starting to, distance themselves from the pack. But would you say then rescheduling, like, the more and more you look at it, like this is extremely important for the overall health of the industry, especially when you factor in it that way. And this absolutely needs to happen. Do you not think?
Yeah, I think for every social equity person, every mom and pop out there, this is like the difference in a couple things. One, they start producing enough money to create like organic growth in their businesses and distribute to investors. And then, then obviously you see more capital, right? So if you start seeing like a meaningful return, more money will come in. Even if it's de minimis, it'll be enough to kind of carry us from where we're at. And then I think credit's going to get a lot easier, right? So because like everything underwrites much better without having to pay 280E. And so IRS is ahead of you as a debt lender, right? And so can't bankrupt them. So, I think rescheduling, it creates a true industry. I think like we go from, can this industry survive to it's going to survive, now I need to pick the winners. So I mean, everything. If it doesn't happen, there's just going to be very, very few winners. And, there's going to be a handful of privates that build decent businesses that look like small GTIs. And then I'm not concerned about the 3 or 4 top MSOs surviving. They'll figure out a way.
Yeah.
There's too much infrastructure there.
Yes. How's Arizona going the second time around with Story? I mean, we saw Arizona shoot out of the gate. It was one of the paramount adult use markets. Then we started to see it kind of roll over. What's the general consensus right now coming out of that market as far as the health of the market and just how it looks today?
It's steady, Eddie.
Okay.
There was a, it was in the legislature. It was fighting a hemp bill, which seems to be like a new common theme everywhere. And so I tell hemp people are always calling me going, you're trying to kill our bill. It's not fair. You have a monopoly. I'm like, not really. I'm like, I could probably advocate for hemp if I could like not have to pay weird taxes. I mean, you guys want a free market. You want me to pay 280 every day, pay 60. You want me to pay 60% of my income on taxes. Like that doesn't make sense. So I'm like, so there's like some intricacies that they don't think about, right? That we're already getting kind of pounded. But that market to me is the most predictable. So it's not the sexiest. Licenses are probably too expensive now compared to what the market does, but it steadily grows and it's got real organic growth with like people moving there,
Okay.
So I think Maricopa County has been the fastest growing county for 5 or 6 years. So I think it's just the most steady, predictable market. If I'm an MSO, Schedule 3 passes, and I start consolidating, I would think Arizona is the first place that gets consolidated because it's one of the few states where there's no license cap.
Right.
That's kind of why I think the values stay higher, because you always have every buyer, right? Like our business in Ohio, we can't sell our business to any of the big 4 MSOs. So, so it's like we think about where's the exit there. We'll always have an exit in Arizona.
Mm-hmm.
Okay. Interesting. So that reinforces the deal that Verano got done last week, I guess, with the cannabis, picking up those 2 locations in Tempe and the other one. I mean, circling back on hemp, where do you think hemp falls in the grand scheme of things? I mean, we talk about intoxicating hemp products. It's no secret that they probably are eating into the traditional cannabis, to the traditional cannabis operators' market share in states. And I mean, it's kind of like just the elephant in the room that no one wants to address. Like, where do you think that ends up after it's all said and done?
Dutchy guys I speak to on a frequent basis are really sophisticated on some of this stuff. And they said it's 10 billion TAM right now on hemp.
Yeah.
So I think it's 10 billion. It's kind of interesting. You're seeing like the hemp industry kind of split themselves up. So beverage is distancing itself from THCA and vape and gummy. And so it's kind of looking like the hemp beverage people and THC people are probably going to play ball together. If I had to guess,
Hearing that more and more.
Yeah. I think that hemp beverage is going to go. And I think the rest of hemp at some point is going to get addressed in that farm bill. And I think it's going to feel some pain. I think it's going to get regulated at some point. I just don't see a free for all, but it's also an uninvestable business because you're like, what state are you going to get killed in next? It's almost got worse issues than, other than the fact that it's not regulated and anybody can do it and send it in the mail right now. As far as it being an investable business, it's worse than the THC marijuana market.
Absolutely. I was talking to a banker on Thursday of last week that's selling a hemp business. And I go, what's your plan if this gets amalgamated with traditional cannabis and interstate commerce goes away overnight? I'm like, you're dead in the water. no one's going to touch this business. And they're trying to get healthy revenue multiples on the actual assets. I was like, good luck. Good luck, because there's a lot of wind in your face.
I've had one-on-one meetings with some U.S. senators on this and their staffers. And, I walk in the room and I'll bring the products, right?
Yeah.
And then you put it in their face and they start looking at it and actually, they'll start reading the labels because they actually have no idea. And then, when you kind of look, you kind of legalized weed. And they kind of look.
They did.
Well, I know, but they look back at me and they're like, what do you mean I legalized weed? Like, no, you really did. And this is what you did. And this is what you voted for on page whatever of 600 that you couldn't
What's
read.
their response when you say that?
They're very good at diverting, right? And then, what happens is they end up not portraying me as a stoner, because I think everybody's in this business a stoner, and I come in and I give them background. So they start, oh, you're a businessman. And then they'll start talking to you. And we're talking about people on the right here. People on the left are obviously way different conversation. But they become concerned that they got buffaloed, and they don't like that. And so it's you're going to start seeing things that are going to say, you legalized weed, and it's coming, right? And they're going to put your name on it. And then I'm I bought this in a vending machine a block from your office, and it's in every gas station. And now the next thing is mushrooms and MDMA and everything else. You guys have no clue what's going on, right? Because in the state of Texas, for instance, we have a hemp law. You can have 2 ounces of hemp. It's you put hemp flower in a car, right? Cop has no clue, right? So cops have given up. So Texas is just a wide open, blown, legal cannabis market.
Yeah.
Decriminalized in Austin. Do whatever you want. Hemp's in every gas station. I drive in it's a 20-minute drive where I play golf. And I go out and it's hill country. And I stop at a station of gas, and next door there's this little shitty hut and it says dispensary on it. It's funny.
Well, it's funny because people on Twitter all the time now are like, oh, what did Kamala do for cannabis and Biden? And it's all right, well, they're pushing rescheduling forward. And then people always interject in, McConnell and Trump legalized cannabis technically with the Farm Bill. There is a legal cannabis market operating under the purview of the Farm Bill in the United States. I can go to Total Wine right now around the corner from my house, and pick up a 6-pack of THC beverages. To me, that is insane when you think about what the traditional market operators have to deal with on a day in and day out basis, when these guys are just operating freely in the market, unencumbered.
I think they've got headwinds, whether it's Harris or now and no McConnell in there. I think they got real headwinds. I don't think they're going to
Lots going on. I got to ask, though, when you think about this industry and how polarizing it is, what is your mindset to basically start a company, sell to TrueLeaf, start another company, sell to Air Wellness, and then go back to a group of investors and say, we want to repurchase that endeavor again? And, what made you want to come back?
Well, one of the motivations is that you don't know how long the opportunity is going to be open. So you want to kind of take advantage of it. And, from an intellectual timing standpoint, it's a very short-lived asset to have this kind of knowledge in the space. And we've been very good at being able to get licenses cheap too. So we've had a high win rate on that. And if you look at the business model, the best business model in space is win the license, operationalize it early, be in the market before it turns rec, right? And then kind of run the business. And we know how to make money now. Our current business is in year 3, and it's making meaningful free cash. So
that's great.
Regardless of the outcome of this, we'll have a distinct difference on the value of this company and its exit opportunities. But as far as its existing cash flow, it probably does better on a cash flow perspective if everything fails. I hate saying that. I want that. I mean, we sell in public securities, and we advocate, even help people in states we don't have operations in, just, from a pure karma standpoint on the industry, everything to pass all the time. But there'll be no new money that comes in the space. No new supply that comes into these markets. And so the existing operators, if they just want to run their business, and they don't mind the tax rate, nothing passes, their existing businesses are going to prosper.
With Story, is there a certain part of the value chain that you're focused on, retail, cultivation, processing, et cetera, or are you full vertical in the markets that you're in?
We're full vertical in most cases. In New Jersey, we're just retail, and we kind of thought Well, we've seen this game, right? Like in non-limited license markets.
Yeah.
And so we didn't anticipate not $1 is going to get invested there. We probably would have broke ground, because if we can get our money back, 18 to 24 months in the cultivation asset, we'll do it. And then the margins happen, but you can't kind of come in late. So if we're late to a market, we would probably focus on just retail and potentially manufacturing. But for the most part, I look at market by market and say, in Ohio right now, if you had to go do Ohio today, you'd probably just want to be a retailer.
Right.
Okay. Yeah.
Spend 3 years so you get in the market from the time you start working on it. But
are you looking at any other markets, such as like a Florida, or it's kind of just head down, operate in what we're in right now, and just keep producing free cash and just keep that machine running?
We'll go to all the kind of new limited markets. So we applied in Kentucky. We didn't love the rules in Minnesota. We think it's kind of unlimited license. We're lobbying North Carolina. That has a decent chance of getting through later in the year. It's really close. Whether that happens or not has to do with like other political issues in that state. It's on the cusp of being able to be approved. We applied in Alabama. We won, but we never got a license. So we would prefer to go to markets that have no even visibility to profitability, but be there early rather than come into the mature market.
Okay. And is something like a Georgia, is that unattractive due to the product mix that's actually offered via their medical market? Or is that something like almost too early or too immature?
We're working on Georgia as we speak.
Okay.
So we plan on being in that market soon.
I'm assuming you guys are looking at that from an underwriting perspective as being a pretty big market in terms of in terms of TAM.
Yeah, I mean, even if they allowed a lot of licenses, but you're there for one of the first 6 of meeting, you make so much money early that you can justify being there. We'd rather sit on an asset that makes nothing, that eventually is worth several $100 million, than go chase like a normalized annual 15% levered return on a retail asset in Illinois.
Yeah. So
thinking like more like, hey, I want to deliver 5 to 10x to my investors on a levered basis later, rather than worrying about getting somebody 15%. People are not in this for a 15% annualized return.
No, not at all. They can go invest in a bunch of commercial real estate deals for that and just clip coupons. So, I mean, I'm assuming that is where the investor interest is right now. We'll call it that Southeast corridor: Kentucky, North Carolina, South Carolina, Georgia, Texas eventually. As we're seeing it's kind of almost cart before the horse in Texas right now with the decrim on the municipal level, and they're not really making any headway in terms of an actual formalized cannabis industry within the state. But is that where the focus is really going from a private investment perspective?
Yeah, I mean, the playbook's out. You just need a high population base, less licenses, and saturated markets don't work. The other factor is that how the regulator governs has a lot to do with how these markets work. In California, there's no governance. So you have people like legal business paying high taxes with allowing we had a store, just I'll get quick on this. We had a store in Venice that we thought was going to murder it. We were right on the main strip, only one other store in the area. And this is early days. And we're like, oh, this is just going to print. We saw the demographics in some of our stores in Arizona. This store is going to do crazy numbers. Well, when you have 2 or 3 other stores open, don't pay any taxes, and I got to sell the same eighth for $75, they got to sell the same eighth for $30, you're dead, right? And so that's what I mean about the regulator. If the regulator is not going to do anything in these markets, the legal business is a zero. And that's why New York's so tough. Same issue.
That's frustrating.
Totally. Those are hard to underwrite.
Well, when you think about it, you're the first location, Venice Beach. Of course, you would think that's going to print money, but this is another reason why the industry is complicated, right? Totally. But that's interesting about the Southeast region. There's roughly around 11 million people that live in Georgia.
Yeah. And I think there's a little more than that in North Carolina. Yeah. Virginia's got a decent population. South Carolina's decent. I think Alabama's even 6-7 million people.
Yeah.
Yeah.
I think that'll only get fast tracked too if Amendment 3 passes. Because when these companies try to grow and scale and go in various states, it's not as easy to build the concept that you have in Florida, say in other states. But if you have neighboring states right there, I think that corridor, like you said, Anthony, will fast track even that much quicker if Amendment 3 were to pass.
Well, I mean, hopefully the politicians that are in charge can take some key learnings out of Ohio, which is a red state that carries weight within the GOP, and see, all right, Ohio did this the right way. Let's get with the times and start implementing these programs in North Carolina, South Carolina, Louisiana, Georgia, and bring these markets up to speed, which then, yes, they'll be printing money out of those markets.
Yeah. All right. We'll let you run. But before you go, last 6 months of 2024, what's your biggest prediction for this industry?
Schedule 3 gets through, Florida passes, and everybody's happy.
Okay. Now time for question number 2. Schedule 3 happens. Amendment 3 happens. Where's the state of this industry then?
New credit comes in. All these companies are re-rated. People are now talking about things that may or may not happen, whether we get uplisting, credit cards, banking. But if we don't see a much more mature investor market, or we don't see institutional capital, these companies are buying back their stock like by droves.
Yeah. I bet. Yeah. So all in all, you believe Schedule 3 to Amendment 3 passes, the industry suddenly overnight is in a very good situation, correct?
Yeah, that would be my bet.
All right. There's the takeaway. Jason Vedadi says so, right?
Great. Perfect.
Well, listen, always hearing your story, but yeah, I think the reason why they have some credibility here is just your background and the success that you've had, and just knowing of the overall industry and where a lot of this money is being deployed right now and what we could see as far as trends moving forward. So appreciate the time. Let's definitely keep in touch. And as well, just really appreciate the feedback and the updates that you think for this industry is going to expand. But thanks again. Okay.
See you guys.
All right. Thanks Jason. Sir. Hey, everyone. Thanks for watching our latest podcast. What'd you all think? Is there any information that we're missing? Is there anything you want us to cover? As these industries heat up, we're getting access to more and more big hosts. So let us know the questions that you want us to ask for you. As usual, smash that like button. We want this to go viral. Click on that bell for all notifications for the latest interviews that we're doing. And as usual, let's build this community. Subscribe to our channel because we appreciate it, because we wouldn't be here without you. Thanks for watching, everyone.